Hi there, POA champion. Welcome to today's video. If you want to gain as much marks as possible on your CSEC POA exams, you're in the right place. Now, if you're new to this channel and you don't know who I am, I'm yours truly, Makeda, an accountant, founder of the Accounting Academy, and POA tutor who has a distinction in POA. And I'm on a mission to transform as many grades and lives as possible. And I started by transforming my own grades and my own life. When I signed up for POA the first time, I failed miserably. However, by the next sitting, which is approximately 5 months later, I was able to get the distinction that I now have. All right, so too many students are saying POA is a struggle, POA is so challenging. I want to stop the struggle with POA, and I want to help students prepare to pass POA the smart way. Okay, I'm also on a mission to help as many future accountants and entrepreneurs understand the language of business, which is accounting. Now, this is not about me. It's not a talk shop about me. Let me know where you're viewing this video from. Represent in the chat, drop the name of the country you're viewing from, or drop your flag. All right, so let's look at these 3 questions that you guys must be able to answer. Number 1, which was inspired by May-June 2017, number 6. It says, which of the following are examples of current liabilities? So you have to go through this list here, and you have to select which of these are current liabilities. Is it 1 and 2 only, 1 and 3 only, 2 and 3 only, or 1, 2, and 3? Well, let me tell you, off the bat is not D. So let's go through the details. Current liabilities refer to money which has to be paid in less than 1 year, aka short-term liabilities, also known as money outstanding or owed that has to be paid in the near future. So you have to go through this list again and see which of these are money owed or outstanding that has to be paid in the near future. Many students recognize 2 of the 3 options, and I think that is where the hard part comes in. So if you're in a position where you don't know what mortgages are, well, mortgages are long-term loans to purchase property. That's a really simplified definition, right? So mortgages are long-term loans, but we are looking for stuff that has to be paid in the near future. And while we are at it, in case you don't know what accounts payables is, that is money owed to suppliers, and accrued wages is money owed to employees. The examples of the current liabilities are accounts payables and accrued wages. Those will have to be paid in the very near future, right? Those are outstanding money that will be paid in the near future. It's going to be paid in less than 1 year, maybe even in less than 1 month, right? People want their money, they are not playing. So again, if you did not know this, please take note. Accounts payables and accrued wages. These are money outstanding that the company has to pay in the near future. If you got that, drop a 1 in the chat for me. While you're at it, don't forget to like, subscribe, and also share so that other persons can be blessed with this information. Number 2, one that we have to do some calculations with, and this was inspired by Jan 2020, number 5. So do go and look at the original question, and once you understand the concepts of these questions that I'm showing you here, you will be able to get those marks in the exams. You don't want to leave any marks on the table. So this is a bit long for our 1 marker. So we have to move quickly and understand the concept of this. They want to know from the information above, Mrs. Singh capital amount is what? And that is a nice exam strategy to read the requirements or what it is they want from you before you go into the details. So when you're going through the details, you can start to gather some of the information. They gave us assets and liabilities, and they want us to work out the capital. Let me go to my notes here. So we have to use a formula which includes these three elements, and a formula which includes the assets, liabilities, and capital is called the accounting equation. And it says assets is equal to capital plus liabilities. Please learn this. You will not get the formulas in the exam, so they have to be in your brain and you have to be able to recall them quickly. All right, so this is one for your formula book that I mentioned last video. Learn it. Now we know which formula to use. We can work the question out. And this is my preferred method to work out a question like this. So firstly, write down your formula, which is assets is equal to capital plus liabilities. Then you want to go through your list and identify which items are assets and which items are liabilities and plug them in. Assets are the things that the company owns, and the liabilities are the things that the company OWE, right? What they have to pay. So go through the list and identify your assets and your liabilities, which I did, and which you can see on the screen. So we have the first asset being 500. So this is your inventory. Then we have 800, which is your cash at bank. We have 150, which is your receivables. And we have 600, which is your cash in hand. Those four things are your assets. We have the liabilities in green, 700, which is payables. And we just spoke about accounts payables being a liability, a current liability. So sometimes they would write the word accounts payable, sometimes they would write the word payables only. It's one and the same thing. The second item we have in green there under liabilities is your bank overdraft, which is 375. If you don't know what that is, let me know in the comments. Feel free to ask any questions in the comments. I'll get back to them. So when you add up all the items in purple, which are your assets, you're going to get 2050, 2050. When you add up the items in green, which are your liabilities, you get $1,075. Now we have to solve for the unknown. We have to work out capital, or simply saying we have to get capital on a side by itself. So we're going to move the 1075 and bring it across next to the 2050. Once you carry it across the equal sign, you know it's going to become minus, right? Please make sure you know how to make something the subject of the formula. That is going to come in very handy in POA. Now we have the numbers on one side. We have the letter, which is C by itself. And you work that down, you would get your answer is 975. All right, so instead of learning three different formulas, you can use the main formula, put in what you have, and then solve for the unknown, which in this case was the capital. So your answer is going to be C. All right, just one more question for today. And this question is inspired by Jan 2018, number 29. It says, how will the purchase of furniture on credit affect a firm's balance sheet? How will the purchase of furniture on credit affects a firm balance sheet? Well, let's see. So to figure this out, you have to ask yourself some questions, right? You have to take a little bit of time and get familiar with how transactions affect the firm's assets, liabilities, and capital. That's what they're asking you there in a nutshell. How will this transaction affect the firm assets, liabilities, and capital? So they take some time and imagine how the transaction will affect what the company owe, and what the owners invested. It's a good idea to get very comfortable with this way before exams, because you don't have much time to imagine and to think in the exam. The firm purchased something, right? So which is the furniture. So the firm now own more things. Think about it. If you already have let's say you have a Samsung phone, you come and you purchase an iPhone. You now have two phones. So when you purchase, you get more things, all right? I hope that simplified analogy helps you realize when you purchase, you will own more. And once you own more, it means that your assets increase. The amount of things that you own has increased. So your assets increase with purchases. All right. So that one was a bit straightforward, but still I know students get trouble with that. The flip side of this is the firm purchased the items on credit. So this means no cash was paid. No cash was used in this transaction. And because of that, the firm now owes money, right? They now owe more money. So for instance, if the furniture costs $5,000 and they owed $0 before, right? So they had no money outstanding before, they would go from 0 to 5,000 because of this transaction. So you see how the liability or the amount of money they owe increase. All right. If they had some liability, let's say they had $7,000 outstanding to pay, and because of this transaction, which is valued at 5,000, they went from 7,000 to 12,000. You could see how the liabilities or the amount of money they owe increase, right? So once they purchase something on credit, this is equivalent to like a loan basically, because now you have money to pay. Whatever money you have to pay has increased. So your liability will increase when you purchase items on credit. Let's see which option includes both assets increasing and liabilities increasing. And luckily for us, that is option A. So you shade the option A and you keep it moving. All right. Once you understand that, drop one in the chat. Let me know if you have any concerns or any questions as well. Yeah, so that's it. 3 questions really quickly. Remember, you just have about a minute and some to answer questions in your paper 1 exam.